Hi guys, it's Any, aka the Not Trader, your friendly neighborhood swing trader, back again with another video. Now in this video I'm going to give a quick technical report and just view on some of the stocks I'm looking at this week, because I didn't give you a pick of the week last week, and I explained to you why I didn't give a pick of the week anyway. So let's just get into the video. Now you know what I'm going to ask you to do next. Like and subscribe to the channel. Also, I've got Facebook, Twitter and Instagram at The Not Trader on all social media platforms. And in the description below, I've got a link to my mailing list. If you want to join my mailing list, you'll get alerted anytime a video comes on. So that just keeps you up to date for those. Some people haven't been receiving the alerts. And I also give a breakdown of my stock picks. My stock watch list is there. So yeah, let's get into the video. So I'm just going to be going through some stocks and just giving my views on and breakdown on them. Before I go into that, I want to talk actually about the massive sell-off that happened on Monday. So it's Tuesday the 26th of March that I'm filming this. So Monday the 25th of March 2019, there was a huge sell-off. Let's look at the major indices. If you want to look at DAX, there was a huge sell-off. You can see here that DAX dropped quite a lot on overnight on Sunday night into Monday. Dropped over about give you that's the 4-hour chart. Yeah, look at that. All the way into Monday, it dropped quite a lot anyway. It dropped quite a lot. So did the FTSE and so did some of the US stocks as well. So the reason behind that was there's been a lot of fear mongering. Well, I won't say fear mongering because it's justified. The yield curve for treasury bonds and notes. So if you watch my video on my trading 101, I talked to you about what bonds are. It's just when retailers or third parties lend money to the government and they get paid back on interest. So it's kind of a reverse of kind of, let's say, a mortgage, for example. So by people like us, me and you, lending money to the government, we get paid back with interest, and it's seen as one of the safest ways of generating money through investments, because the government's not likely to default on a loan. So the short answer is that the short response is that actually, do you know, yeah, better way to explain this, I'll just bring up an article that I read on this matter, as they'll explain it better than I can. So in this article by Huffington Post, they talk about 4 signs of a recession coming, but I'm just going to focus on the yield curve. So it says that historically, when the yield curve is inverted, the interest rate on shorter term treasury bonds is higher than the interest rate on long term treasury bonds. A recession can sometimes follow. And well, what that means is that every time the yield curve has become inversed, over the last 7 times, let's just say the curve was inverted prior to the last 7 recessions. So every time there was a recession, the last 7 times, there was an inverted yield curve that preceded it. So it's an omen that a recession is coming. So when the markets and the analysts or whoever identified this as, well, it looks like a negative inverse yield curve has happened, the market got scared and people thought, okay, recession's coming soon. So people started selling off. So that's just something to take into consideration. So that's why there was a sell-off. But in my opinion, I think a recession is coming. I don't know whether it's going to be this year or 2020, but right now I think that was a bit of an overreaction. I don't know if there's still more of a sell-off to happen, because if you look at like the Dow Jones, the 180-day simple moving average is acting as a resistance now, so that can mean that this could drop some more. You never know. So I wasn't really happy with the way the market was set up right now. So I'm a bit cautious, let's say, to kind of trade anything right now, because I don't really like what's going on, especially in the UK. the situation of things right now with, is there going to be a no deal Brexit? Just so many external factors going on that I wasn't really. I didn't like the situation in the market right now, so I haven't really. I would, if you saw my Instagram, I was gonna pick BAE Systems as my pick of the week, for several reasons, and I think it will still end up rising eventually. But as you can see here, it's had a huge sell-off, and I didn't want to kind of promote this while it was in a situation where it was nosediving. I do think it will end up retracing eventually, but I'll need to see it start curving upwards and clawing back some of the losses that it's made before I can kind of promote it, because I was hoping that this would go up here, break the 180-day simple moving average, treat it as a support, then carry on up, but it hasn't done that. It's actually treated that as a resistance. So as it stands, BAE Systems still on my radar, and I still think it will eventually be a buy, but not right now because it's broken pattern. But I think it will retrace back up eventually. What I'm looking at right now, I'm looking at, let's just go through some stocks that I'm looking at. Where's the FTSE? So the FTSE 100, if you look at it on the macro level, let's look at it at the weekly level. It's been, this doesn't really give me much information, but let me see if I can plot some lines here. So yeah, there's a line here that can be plotted on a weekly scale. So this could have been a buying situation here, here, here. But oh well. Let's go on the daily. So now that we've identified that buying sign, and this line kind of runs parallel with these lines as well that I plotted a while back. So it seems to be making higher highs. Let's go on a 4-hour chart. Now it's getting a bit messy, this chart. At least you can see me kind of do some technical analysis live, because a lot of times I plot these graphs before I make the video. So on the 4-hour chart, there's a line, potential line here, but I don't know if I'm forcing it. Okay, I'll plot this one here and just see how it goes. Plot that one there. On the 2-hour. Now the 2-hour one's quite interesting because I can see a definite line here. It's getting kind of messy, but you never know what these lines can mean. So this one could have been interesting. You could have entered here, 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 or here. So what I want to see from this is that hopefully it will start making high highs, but based off of, as I said, it had a huge sell-off around Sunday, Friday and Monday morning, due to the information I told you about the inverse yield curve and possibility of a recession coming. What I need is for the price action to break the 180-day simple moving average and start kind of making some serious higher highs, because I'm not too confident on this one right now. The MACD has leveled off, so yeah, I don't know, look at that. The MACD is leveled off, as you can see here, so it's kind of plateaued. I don't know if I like to see a MACD that's gonna start making high highs, but you never know. It might have plateaued like it did here, try to find this base and then carry on driving up it again. So plateaued. If what I want to see it do is plateau and then maybe start rising again. The RSI is not really telling me much because it's at 50%, at the 50 mark, but it looks like it might be on this way up. So this potentially could go up, but it's kind of a wait and see situation with the FTSE. So I'm just gonna wait and see with that. Some other stocks that we could look at. Natural gas. What's natural gas doing right now? Natural gas looks like it's just been selling off. this ain't really telling me much, but you can see here, this was a pivotal point last Tuesday. Natural gas was trading above its 180-day simple moving average, and then it broke underneath, consolidated up against the 180 simple moving average as a resistance. Now it looks like it's gonna carry on going down. It looks like it might just keep falling. Notice that, yeah. So notice that on that 4-hour chart, look at the way the 180-day simple moving average has gone up, come down. And if this 180-day simple moving average starts curving downwards, then I'll kind of know that it's gonna sell off some more. So that'll be one to watch. But as of now, not taking any action on it. Even though on the 2-hour chart it looks like it's curving down, it's going into negative territory on the 2-hour chart on the MACD. Let's see. Yeah, the 1-day chart doesn't really tell me anything. 4-hour chart, it might go down some more. Yeah, this is just one to watch. I'll leave a note here. Actually, I'll just leave it for now. This is a good one. I've been watching this for some time. OHI, if you see some of my old pick of the weeks, you know that I've been watching this one for some time. As you can see here, ascending channel pattern. Well, it's not a channel, it's more of an expanding wedge because these two lines are parallel. It's right now, it's at the same point it was at a previous resistance. That's why I plotted this line here. So it's kind of done what I needed to do. It's gone up, it's come down, it's gone up, come down. Double bottomed on this support line, made higher highs, and on the 4-hour chart, it's done even better. What it's done is it's broken out, consolidated on the 4-hour chart, and now it's making higher highs. Now, what I'd want to see from it is to break out of this this position here, because this could be like a resistance. Once it breaks out of here, I'd wait for it to retrace, and then that could be an entry point, because this one could go up as well. But I am cautious because of the market conditions at the moment. But it looks like this could be a good trade. So yeah, what I'm gonna do is I'm gonna set an alert just above this line here. So I've set an alert. Yeah, that's one I might watch. So I just did a little bit of live trading. Not trading. It's not really trading. I did some live technical analysis for you. I'll do these periodically, accompanied with my pick of the weeks. I'll still be doing my pick of the weeks, but the pick of the weeks won't be every week, because I've realized that when I task myself with doing it every week, I'd force myself to pick trades even when I didn't think there was something there of value for us, and I want to only give us valuable trades. Another one that I want to look at quickly is ABF, because this is one that I looked at a couple of weeks ago, but it didn't look like it was ready to be a buy. But I think right now is the time to buy. This is not an endorsement to buy, by the way. This is just that I looked at this stock a while back, but it was just lingering. It was lingering at the resistance line, but it hadn't really made the decision what it was going to do, whether it was going to carry on going down or go up. But there was a lot of analyst reports, and I did a bit of fundamental analysis, and I knew that this company looks like it's doing pretty well because they own Primark and they own a lot of sugar subsidiaries in the UK, and the fundamentals looked pretty good for this company primarily because of Primark. So I thought, yeah, this company has potential to go up to at least £26. So but it was just lingering at this resistance line. But right now it's done what I needed it to do. You know what I preach about. I preach about the entry point being all about it broke the resistance, came down, consolidated on the 180-day simple moving average, and treated it as a support, and now it's making higher highs. So I think this can go at least up to 26. But it may take a while, maybe quite of a slow grind to 26. So this is one on my watch list as well that I'm looking at, ABF. So I'm gonna highlight it. So yeah, that's That's me, not trader, signing out.